What's up, everybody? Joshua Salvetti, Darren Bowman, coming in from the High Performance Trader. Today, we're going to be breaking down everything that we've learned, everything we've accomplished, all the information we have gathered in the first 6 months of 2023. So I don't know, but for everybody out there that is following everything we're doing over here at the HPT Discord, right? All the we're doing, we have started this 6 months ago, right? It was January 1st, 2023 when we first decided to make the Discord. March 3rd is when we went live, and we have made tremendous growth over the last 6 months. Our edge has grown, our perception of market information has grown, our ability to follow our process has grown, our performance has grown, our team has grown. Darren, talk to me. How do you feel about the first 6 months?
Last 6 months, and we said 2023 is our year. We're halfway through it. We've absolutely crushed it, but we got a lot to do still. And if we keep going how we have for the last 6 months, we're going to achieve massive things. So super proud of all the work we put in, especially you, Josh, putting out all the content, and everybody who shows up to the Discord, watches all the videos, and everyone on HPT. Let's keep this going.
Yeah.
It's been an amazing half year. We've got a great year left.
Absolutely. Like, it's so crazy. So, like, just real quick so everybody knows, and I know me and Darren plan to really dive into our relationship with the market, with ourselves, right? Everything that we've learned. But just real quick, right? So the trading journey is so important, right? Like, I want everybody to understand that everybody's trading journey is specific, it's unique. But the most important thing is that you do not end up average, right? We're all very unique. We all are completely different. We've lived different lives. We've learned different beliefs, right? We understand things differently. We perceive information differently. Yet so many traders end up failing, right? And falling into that average output lifestyle, right? And I really want to talk about, right, the behaviors that we have took over here at HPT to help us grow as traders consistently. How we consistently get in and out of the market, right? How we've learned to extract fear and anxiety out of our trades, right? How we really dive deep in a systematic approach day by day to understand the information that's in front of us, and not only to understand to it, but adapt to it so that we can consistently make money, right? So, like, I'm so pumped and proud of how far we've come, Darren, because it seems like yesterday, where our edge was just very simple reversal chart patterns. And now we have learned to really adapt to the market information, understand who's in control, using volume, using price, using critical levels, right? And understanding that information that is present is the most important, right? And just that whole philosophy of reacting to market information has been a complete game changer. And I really need everybody to understand that. So we're going to dive really deep. Yeah, we're going to dive really deep into that. But just looking at these charts, man, let's look. This was, look at this, dude. This was January 1st right here on QQQ, right? And
it's coffee with grain, basically.
Yeah, look at that. It's so awesome to see, right? So a couple things I just want to identify real quick before we go any further is, right, so we talk about this all the time. The importance of identifying market conditions, right? A lot goes into that. But one of the most important and effective ways to identify market conditions is to use a larger time frame and identify levels, and also and look at them as if it was a 5-minute chart, right? So if we were trading a reversal over here on a 5-minute time frame, right, and price came down into a previous demand zone, right, we're looking to go long, right? But first we want buyers to prove to us that they want it, right? So I've identified a critical level over here at 312.33, right? This is nothing other than a previous resistance, right? This is an area that I am looking for buyers or sellers to defend, right? Same with 333.34. And look at this bull flag we get right into this resistance, right? And all this is telling us is sellers were here, they were present, but buyers were stronger, right? So it's so cool to look at this. Like, this is a weekly time frame, right? Each candle is 1 week, 5 trading days, and when you look at it as if it's a 5 minute time frame, this is a perfect reversal, and this is a great way to identify and adapt to market conditions. Right? It's really cool. Look at that. I mean, we get multiple. Look at the break, the retest, the break, the retest. Right now, we're trying to break this 371.64, and we'll go from there. So it's really, I love trading this way.
Yep, everything we talk about, you can zoom out on all time frames.
Yes.
Really, I mean that break and retest that I'm seeing right there on QQQ on the right. I mean, we see that multiple times a day.
Yeah.
Those are the trades we literally take on the 5 minute and the
Yeah.
2 minute. So, I mean, it's exactly what you're saying. You zoom out and you can treat it exactly the same way.
And it's such a good way to. Go ahead, Darren.
Yeah, Josh. One thing I wanted to say about our whole strategy, and you mentioned adapting to market conditions, but one thing that I think we've done really well in HPT is we've stayed consistent in pursuing sharpening our edge, but we've allowed that to change our strategy, and our strategy has changed as market conditions have changed. And I think one thing that I guess everybody on the Discord has noticed is we've been able to adapt our strategy as we learn, as we go through our journal and figure out what's working and not working, and our strategy allows us to adapt to conditions better. So if you're the kind of person who wants to have one strategy and stick to it for a whole year, it's not going to benefit you because you need to adapt to current market conditions. That's going to mean 1 month you have one strategy, 1 month you start favoring a new strategy. If you're not adapting your strategy over time, I don't think you're properly adapting. And you can see that clearly through our weekly recaps, Josh's videos, and just the setups that we're taking overall. And I think that has contributed massively for us to properly adapt to conditions. So I just wanted to say that because that was kind of like back to your original point in the beginning.
No, Darren, you said that perfect. And I'm so glad you said that because, I mean, and what that all comes from, right, is accountability. So we talk about this all the time, right, where traders need to feel they are correct, right, where they are right, and whether or not this comes from growing up, it doesn't matter where it comes from, but this way of thinking can kill you. It killed me for years, where I needed to be correct. I needed my one strategy to work. And I think it comes from putting so much time and effort in learning it. And a lot of traders do that. And then they allow that mentality to keep them from success. Because if you're stuck on one strategy or one philosophy, right, and you're not willing to change it, you're not going to be able to adapt to market conditions. So the fact that we've been able to pull our ego out of it, to pull our ability to be right, that real satisfying, I'm right, I'm correct, I put in the work, I deserve it mentality, we've pulled that out of our trading. We've completely diminished it. Now, the way we look at the market is I need to identify profitable opportunities consistently, right? We've taken full accountability. This works, this doesn't. We've done this through T metrics, we've done this through journaling, deep diving, teamwork, right? Where we spend time together, especially in these weekly recaps, like you stated, talking about what works and what doesn't. And I agree with you 100%. That has helped us and led us to becoming so much more consistent traders, and not just trading, but in life completely, right? Like we're able to identify any situation in front of us and adapt to it. And that right there, my friend, is a skill that so many people shy away from, right? Because what it is accepting that you might not be right, right? Your strategy, it may have worked last month, it may have worked last year, but it might not be working now. So it's so important, like you said, Darren, to be able to change that and to, trust your ability to change. And oh yeah, dude, that's really good topic right there, man. It's really good stuff.
Yeah.
And that's what
Huge.
that's what's making this Discord so well. I truly believe is the fact that we consistently show up. I mean, look at dude. We're this is month July, right? We're on the 7th month of the year, and the market has done well, right? But we have adapted very well to strategy, to price, to perception. We never let up. We didn't take our foot off the gas once. And yes, we're halfway through. And if not more than ever, now we are going to continue to push forward and and just not let up at all. So that's where we're headed on this year. And I'm extremely pumped.
I think I agree with a lot with what you're saying, Joshua. I find that over the years that I was trading options and I was tapping into all kinds of different uh, gurus and methodologies, indicators, stuff like that. And I would try them out, and they would work for a time, and then they wouldn't work, and
Right.
then I was basically strategy bankrupt, right?
Mm-hmm.
And you lose a lot in the finding out
Right.
that your system isn't working. But so what you're saying is being able to adapt is really accurate, because I find that a strategy works for a period of time, whether it's weeks, months, or a couple of years.
Yeah.
And then the market dynamics change, and you can't explain why, but they just do. And what you were doing before doesn't work.
Right.
So you have to change what you're doing.
Yeah, absolutely. And Rob, I mean, you're a veteran trader. That has always see. I've been training for a long time. It's irrelevant, but what's relevant is that we finally identified that it's not our ability. The most important characteristic of this game is to be able to accept what's not working and to move forward. And I love that. Like, I love that we're talking about this right now, because that right there tells me we have everything we need to consistently adapt to what's in front of us. Whether it's, our tool bag, right? Our strategy will never be bankrupt as long as we're able to look at this with a fresh lens and go, hey, this isn't working. What are we going to do now? And I really think the work we've been putting in with coming to these recaps, with the journaling, with the Discord, with whatever it may be, the reading, the subconscious mind, the just full responsibility over my actions, right? The market doesn't dictate my success. My consistent behaviors do. And that philosophy, right? Like, everyone talks about market strategy. Everyone talks about, our favorite setups. But how about the philosophy, right? The way of thought that it takes to be able to adapt, identify and adapt to any scenario. I feel like that's what really makes the trader. And, I really love that we've seen that, because a lot of traders don't. And, that's what gets me so excited about what's to come. I mean, whether the market stays bullish, whether it turns bearish, whether, we have a financial crisis, it does not matter what happens here. All what matters is our ability to identify and adapt to any scenario in front of us is really going to lock in profits, lock in consistency. And, and I like that, because if I put my faith in the market, that means the market controls the output, right? If I need, my strategy to work, or I need a bull market, or, I mean, we've talked about this before. I'm sure you remember, Rob, there's been years in the market where we'll just pull it up, where the S&P 500, look at this. Can you imagine? This is when I first started trading. I mean, this was pretty, I'm not going to say it was extremely easy, but it was a lot easier than this, right? Because this is two different mentalities, right? When you think, all right, what works here is break off pre-market high, go long, break off pre-market high, go long, right? And then you come into these real volatile years where you're all over the place, you're up, you're down, the volatility is through the roof, right? This year of 2021 was challenging. And this right here, you're going to learn so much more than the, super bullish market. So now we've got all the skills that we've acquired through this year, right? Now we come into this year and see what the market's going to bring. And as you know, I'm not saying that the market's getting easier. I'm saying that we're getting better, and that's crucial stuff right there, So no matter what is in front of us, like that's, we're going to identify it. We're going to adapt to it. And, just keep
Well, what's
building.
been pivotal for me in seeing what you guys do is how we read the market.
Right.
Like a lot of traders have put their faith in, as I was saying, indicators, patterns, things like that. But one thing I've always wanted to know is how the market actually works, and that's where you guys have really turned the lights on. And with other, information that I got around the same time, and it's really all of a sudden, it made me a lot more confident in how I read the market, because it doesn't matter what the chart looks like. I know how to look into the chart,
Exactly.
to what the traders are doing, what they're thinking,
Yes.
what their priorities are, and what they're like how urgently they're getting in or getting out,
Right.
And where they want to take profit, where they want to take a risk, that sort of thing. That all shows up in the charts.
Yes.
And you can read that and then identify the price levels that psychology is working out. And it's so much more illuminating because it transcends,
right.
Your reliance on different other different indicators that people have used over the years. And it's just so so much easier when you actually know and can see what's going on,
right,
in the price movement.
Right. The psychology behind the price movement.
Yeah, exactly. Because indicators tell you what things have been doing in the past, but they don't tell you why, or why there's an inflection point at a certain level. They don't tell you that.
Right.
But once you understand why there's an inflection point, there was one on this date, and it's pretty violent, and wow, so that's really important to traders, right?
Right.
And indicators don't tell you that.
No.
They tell you what's happened, and maybe this will work out in the future, but it doesn't always work that way.
Right.
And so this really is freedom, from the constraints
exactly.
of traditional indicators, I would say. Yeah.
No, it's, and that is the goal. So I love that you said that, Rob, because all right. So I first read Mark Douglas's Trading in the Zone, Discipline Trader, and he really opened up to me, right? Because it was like a video game, right? And I see a double bottom, I go long. I see a double top, I go short. That was a strategy that I used that worked. And then I read in Mark Douglas, we dove deep into actually what these candles represent, what these chart patterns represent, which is nothing other than human behavior, right? So I think I've told you guys this before. If you guys look at your equity curve, whether it's profitable or not, right? An equity curve meaning how much money you're making on a line chart, day after day, month after month, you're going to see break and retest. You're going to see double bottoms. You're going to see everything we see here, right? So let that sink in. It's crazy. So you're telling me I could be all over the place as a trader because even if I was losing money, it was a downward trend of pullbacks. It was so crazy. And then when I started to become a profitable trader, and I learned all this through logging all my trades and all my P&L performance, right? So when I log a week, I put in my journal my equity curve. And you start to look at this. And even with taking money out of my trading account, I still get these break retests. I get XYZ. So now with that information now in our mind, when we start to see what's in the market, we go, all right, this isn't a video game. This represents human behavior. This represents beliefs and expectations, right? we got buyers, we got sellers, right? So now this trading setup is going to be a perfect example. So right here we have sellers in control. Sellers think the price is high, they want to sell, right? They believe they will make money on price going down. Buyers is the complete opposite. They believe they will make money on price going up. That's when the battle begins. So now you get some selling, buyers are interested, right? And now what I do here is identify a level on a chart that I want to see either broken or defended. Whoever defends it, I'm going to trade with. And this has helped me so much. I call it critical point analysis. And it's the part on a chart where the beliefs or expectations of buyers or sellers comes true. These are the areas you want to be placing trades. These are the areas that you want to trade with smart money. Because right, we've talked about this before. We cannot control the market. Smart money can. We need to trade with the overall collective mind of smart money. And when I say smart money, I mean, people that move the market. So what I'll do here is I identify two spots, right? Two resistances, and then a support or a demand zone. So right here, we got 43292, right? This is an area I'm looking for either sellers or buyers to defend. You can see that same seller showed up. So look at how I'm using the supply and demand, price and volume analysis, right? And identifying critical levels with it, areas of value, and then seeing what price does in these areas to paint a picture and then trade accordingly, right? Because I know if we can hold 43292, there is a high probability we're going to at least go up to 43444, right? Because, the market, you get these large liquidity or market orders at these levels, right? So when price is in between them, they tend to gravitate to these levels like magnets. So with that in our mind, we can now make a high probable trade if we can hold this level. And look at all the congestion at this level. This is what we call a battle, right? So now we're getting a battle over here where you got sellers and buyers, right? Both with two completely different beliefs and expectations of price. And then you bust out of it. You get that break and retest right there, right? And remember, a break and retest is literally, in this scenario, sellers stomping out of their position. And that doesn't mean they're buying. It just means they're not selling as much, which then fuels the buy move, right? And then once these sellers are gone, it's highly unlikely that these sellers are going to be as strong, right? And this whole psychology behind what's happening has helped me now not only trade entries, but trade management, right? You're in a trade, right? Say with all that information that we've just pulled out of this market, you're in long right here. Why stop? Why just take profits right here, right? What's it going to take now, understanding the fact that sellers that were in control here are now not in control? If they're not in control, buyers probably are, right? It's either one or the other. And then so now I've been able to let runners run. I've been able to add to positions because now I actually understand what's in front of me. Like you said, Rob, I love that word, freedom, right? There's no more. I mean, we're pulling chance out of it. We're creating structure, right? Trades that have structure and based on current market information, right? Mark Douglas calls it the environmental information, right? Like you're pulling information from this environment. And that whole way of thinking has been game changing. Because like you said, Rob, we don't rely on any indicators. We don't need them. I honestly, truly believe indicators hold you back so much. Not only because you need to rely on them, but they're mathematical equations. Yes, the market is a numbers game, but as far as it being a mathematical game, I think a lot of mathematicians have tried to figure out the market and couldn't. I mean, from what I believe, it's just a massive human behavior in a battle between buyers and sellers. And if you can learn to be patient and sit sideline and wait for a critical level to break, you will have such a edge over this game. Like it's you know it's it's amazing.
Yeah, I love the setup that you got right here, because
And then look at
it's different as the setups that we used to take in the past, where
right.
like we wait for a double bottom. Those double bottom setups, we we tend to like them because they're easy and not complicated.
Yes.
And it's almost like a crutch.
Yes.
Like we depend on them so much
yes.
that we think that we can place our trust in them. Where in reality, what we need to be putting our trust in is our ability to tell. For example, on this on 26, the beginning of 26, I want to put my trust in the ability to read these candles and identify. Okay, buyers are strong here. They are going to take us to the next level if we break this level.
Right.
That's what I want to put my trust in, is my ability to read this price action and tell what is actually happening there. Obviously, using that critical level created the day before,
yes.
and then identify that move to the upside. Whereas, like before, I would just wait for like some easy setup, like a double top right there, and then I would be like, "Damn, it didn't work," and then I would probably still be in a better state of mind for the rest of the day.
And it's and not only that, right? So say you go for this double bottom, right? You are getting in a trade based only on one pattern, right? Instead of identifying a critical level, right, and going, hey, sellers defend. So you hop in here, there's still a high chance sellers can hold this and price just goes lower, right? But if you wait in this way of, and what I love about this strategy or mentality or philosophy is it makes you wait for the best move, the most trending move of the day. I've noticed through looking at my journal, there's no more like super quick scalps, right? My trades lately have been trending. I've been capturing much larger trades because if you look, there's usually at least, what do we got, the SPY here? There's usually at least a $2 to $3 move every day on the SPY. And I'm not saying quick scalps are bad, but I want the most probable trade, right? I want the trade that has the highest probability of working in my favor. And usually that trade is after a critical level is broken. And that point we talk about where the buyers in this scenario, their beliefs have been reinforced here, right? And you want to trade with those people. You want the people that won the battle, right? Because they have the momentum, they have control, right? And you want to get in with them. And it's been so much better. And then, and what I love about this is what we identify on a small time frame works on large time frames. So now say price looks like this, right? And we're doing our pre-market analysis. This level right here at 43444 is a critical level. If price can come down to this, I'm expecting buyers to hold it. If buyers don't hold it, I'm expecting sellers to have massive control. So now I'm letting the market tell me who's in control versus guessing who is in control, right? That's the difference here. And then, look at that. Price literally comes right into it, right? You get multiple rejection candles. This is a perfect entry. This is a highly, this is a break and retest with a span of 3 days. And then you capture a large move up to yesterday's high. I mean, look at that. That's why, I'm sure you guys see my pre-market analysis. I keep it very simple. I identify some critical levels, and I'm looking for a move in between them, right? Right here, you get a perfect retest, and then you get a rip right into previous day high. What's that? A $3 move or $2 move, a slam dunk. And then you get another double bottom there. And, it just helps you understand so much who's in control and trade with them. I love it. And then look, and then we still have that critical level over there at 43675. And here's the battle, right? Now that battle again. We're getting that battle again. And then we hold above it well. And then look at that run up we get yesterday. It was insane. And, this is literally reinforcing that buyers want this market. They're in control, and whatever or why ever that may be is irrelevant to us. Our main goal is just to identify profitable opportunities, and I feel like this is the best way of doing it. I mean, look at
things become so much clearer after
right
after looking at it that way.
And now what's so awesome is now we log this every day. We journal this every day. Every day we now and what this does is just builds conviction. We now are building a house on rock, right? Versus, like, I look at my journal from the past, it was a house built on sand. It was literally just trades all over the place. And this is where the importance of journaling comes in so much. Like me and Darren this week, we were journaling thoughts and emotions before trades, before the bell, after the bell, during the trade, after the trade. So now we're, and I'm working on a really good trader boot camp video on trading metrics and journaling, because that's literally the it's the most important part of becoming a successful trader is accountability. And you don't often get to tap into the state of mind or perception that you are in when you're in a trade, right? The anxiety, the fear, the question, and we're trying to instill confidence, control, right? Conviction. And just, it's a really good thing. I recommend everybody do it is, journal before the bell, after the bell, during your trade, and after your trade. And, I even record my trades too, which has helped me very much because now I can go back and look at them. And these are the behaviors that are just going to, lead to consistency.
Yeah, because we always talk about feeling your emotions while you're in a trade, but not acting on your emotions.
Right.
Like you need your emotions obviously because they're a feedback loop of like what you're feeling, but you have to make the right decision once you understand your emotions. And I've found that writing them out in my trade journal, like when I see 3 green candles in a row, right at the beginning of the day, I'll just write that down, like how it made me feel.
Right.
You know, and so I'm aware of it, and if I'm aware of it, then I'm much more able to make a decision that's not based on it.
Yes.
I recognize it, but I don't make my decisions based on it.
Exactly.
But I always like to look at my journal like a feedback loop for my trading. So like I can look at where I maybe overcorrected or where I steered off the path. And I don't know how I can improve unless I go back and look at all the tiny little examples of where I slipped up. I let a trade go past 30%, for an example.
Yeah.
Or I traded against conditions. But it's that live feedback loop to tell you, like, what are the things that you can do in the moment that are going to lead to your profitability and lead to your consistency.
Yeah.
So I like to think of that as that feedback loop of like always improving. How do you know what to improve? You go back, you dive deep in your journal.
Yes. And another thing that we were talking about is, I used to be really hard on myself. I no matter what, if I lost money for the day, I'd be like, where did I go wrong? Oh, I should have seen this. I should have seen that. Listen, at the end of the day, if you can develop a trade plan and stick to it, you are ahead of 95% of traders. And what I mean by that is, like, I used to identify a trade plan, right? But I couldn't execute that trade plan. The day would start, I would get restless. I would get, I would get anxious. I would want to put on a trade and get it done. And I couldn't stick to my strategies. I knew every strategy under the book or under the sun, but I couldn't stick to it. Journaling has helped me literally go, hey, if we hold this level, right? We'll talk Friday real quick. If we hold this level, right, which was 368.22, I want to go long, right? Targeting my target, right? Or whatever it was. The old me would have that in my mind, and then the day would start, and I would end up going short up here for whatever reason. You know what I mean? I wasn't sticking to my pre-market analysis. And then I would go on the Discord and look at my pre-market analysis and realize, it was usually spot on. And I understand that we need to be able to adapt. Things change, right? Price action changes. But I just think it's really important to grade your ability to stick to a trade plan. And I don't care if it changes from your pre-market analysis, but just be able to identify, right, areas and then trade with them. And actually, stick to your stop losses. Stick to your here. Let's talk about this day right here. This was a perfect example. It was Thursday. I just want to set it up, right? So this is how I traded Thursday on the QQQ. And this is a perfect example of being able to adapt to market conditions. So this day I'm pretty sure there was some significant news coming out, and price was just kind of really choppy in the morning. You can see here we were all over the place in between 3.6 and 3.65, pretty much just like $1.50 where it was choppy. And instead of feeling the need, I'm going to whip out the 2-minute real quick, to just put on a trade, we demonstrated strong patience this day, right? I literally did not put on a trade until, where was it? Right here, right? This was 11 o'clock. And, was it the best trade? No. Was it profitable? Absolutely. Was it probable? Absolutely. I think end of day was right around here. But basically, in a nutshell, I identified demand zone over here, 36240. Buyers kept showing up and holding it. I had a previous resistance right here.
Yeah, it was 363.40. I remember you called it out. You were like, if we break 363.40,
I'm going long.
You want to go long.
And this, and basically, all I'm doing here is identifying a critical level. Yep, this was it right here. So this was off the open, right? This was demand. Buyers showed up here, defended it once, twice, pretty much 3 times. Sellers blew through it. Notice we're not going long here. We're not going long here. We're not going long here. You know why I'm not? Because this is not a strong demand zone. This is just an intraday level created, right? So these are and have some weight, but I did not want to go long here. SPY was not confluent, and leading equities were not strong yet. So I did not take these trades. The old Josh used to identify a double bottom, and I'm in it, right? Now we wait. I do not like this. I'm not trading this, right? I literally posted in the Discord. I was like, we only trade high quality setups. I do not want any of this, right? I want to wait for the market to give me levels and paint her picture. So we slice right through that level. And then we fall into previous day demand, right? This was previous day low, right? So now we're entering a demand zone that has some strength, right? And we see that strength, right? You can see volume starting to pick up here. And buyers are defending it. But I'm still not going long. I want more. I want more. I want the picture to be more detailed before I go long. So I identify this level right here, right? And if sellers continue to defend it, that's telling me to go short. But if buyers can defend this, I like longs, right? And buyers defended it right here. Look at the volume. Volume started to pick up right here very well, right? I actually went long on this candle, right? Because we broke past this level, retested it. This is when I went long, and I literally targeted right here. What is that? A $1.50 move, right, to the upside. Not the prettiest trade. Not the most, oh, look at this perfect trade, right? But this trade paid phenomenal. It was like 75% return. And what I love about this trade is it took supreme discipline and patience to wait the whole day to identify this, right? That is our job as a trader, is to not let this market lead us into temptation or to just act.
That's facts.
You know what I mean? The market tries to lead us into temptation. We need to stay strong. And I remember I literally seen Darren. What was it, Darren? Like right here at 10:30 or at 11. And I'm like, I love the feeling of not being able to put on a trade yet because I am completely disciplined. I am, controlling my urge to just, go long, right? And this sort of mentality is going to build consistency. Because, like we always say, the market cannot do anything to the trader that controls his behavior, right? This sort of mentality is controlled. It's, disciplined. You're not going to get faked out. And this was the most probable trade to me because we broke a critical level of resistance. And, once again, not the prettiest move, but it paid great. And there was not a lot of anxiety in this move. It could have reversed right here, but I was willing to put on risk. And even if it did reverse right here, my stop loss was literally right here. So here's me entering a trade at 364.40, and my stop loss is at 363.20. I'm risking 20 cents to make $2. That is a phenomenal risk reward setup. That is the criteria I talk about when putting on trades that you must have, right? Like someone said something in the Discord about over trading, and one thing that has helped me tremendously with that is for me to put on a trade now. My criteria is through the roof. Like not, like now I need a critical level broken, and I need a high risk reward ratio. And that presents itself.
What I love about this trade, Josh, is if you look at this trade, there's nothing that's really that sexy about it.
You're right.
It's not really something that I guess you've necessarily posted a ton about.
Right.
But it has, and there's tons of things that could have gone wrong, right? We were below VWAP.
Right.
There had been strong sell-offs for the rest of the day. We were below end of day. And there's all these things that it didn't necessarily retest. But you acted on a critical level being broken and buyers showing up in a demand zone, which those are all valuable things.
Yeah.
But also, what's more important is we acted on a critical level that was created in the open market, right? This is not something from pre-market. This is not something from yesterday. This is something live time.
Right.
And we always talk about being in the moment
and
responding to live price action. And I really felt like that's what you did here is this level was only created. I mean,
yeah. Uh-oh.
I think we lost him.
Yeah, we did. Darren, I lost you, buddy. That's okay. He has a very good point right there. There you are. Got you back.
You looked at volume. You had that demand there, and then you made that call. I think those are all things that we can take to even days that are choppy like this one.
Yep.
We can take that and we can extract out a high probability setup exactly like you did here.
Yeah, exactly. Right. We're not taking. I love that you said we don't. These aren't pre-market levels. These aren't other day levels. They're not sexy demand zones. Right. They're literally intraday. Right. And this is literally the epitome of being able to identify conditions right in front of you and adapt to them. Very good point, dude. And that is the type of mentality and philosophy and mentality that we need to get in and out of this market consistently day by day. If you go into every trade like this, the market can't hurt you. The market cannot hurt you. Like if you control your behavior and you know what to look for, the market can't hurt you. Like I had this issue for a long time where I let the market generate fear, anxiety, but I gave the market that control. Then I learned the market only generates opportunity. That is it. It only generates price action. It generates money. We generate fear. We create anxiety. We believe that we could lose money, so we're all afraid. And I'm speaking for myself, and I'm sure other traders. I used to be like, oh, I'm not sure what's going to happen today. And I still don't. But one thing I promise you that won't happen is I will not act irrational. I will not just hop in stupid trades, right? I can promise you every day I am going to do my best to identify the most probable setup and keep a tight stop. The market can't do anybody with that mentality. The market can't hurt you. The market can't, you know what I mean? So once you start to realize that you are in control of your outcome, you're not in control of price action. You're not in control of a lot of things, but you are in control of a lot of important things. And that is what you're willing to risk, right? How much you're willing to put on, and your criteria of getting in a trade. You are in control of those things. And if you choose to control them, the market can't hurt you. You know what I mean? Literally. Like I learned this from a veteran trader that's been trading a long time. And he's like, dude, I identify a trade, I put my stop in, and I walk away from my computer. That's it. And he consistently makes money. And what's going on there is he can perceive market information so well that he goes, all right, I'm not getting in a trade until we break high a day or whatever your strategy is. And then once we do, he places a stop and walks away. Does it work every time? No. But when it doesn't work, he only loses 10%. And when it does work, he catches massive trends all the way up to, large moves. And that's his strategy. See, we're in control of all that. And I think I used to forget that. I 9:30 I'd be like, "Oh, I don't know what's going to happen today." Now, I don't know what's going to happen with price action, but I promise you, I'm not going to act out of my disciplined self. I know what I need to see to put on a trade. We all do. We might not know exactly what it's going to look like, but we all have the ability to identify a high quality setup, right? So it's up to us to control our restlessness of just putting on trades because we're like keeping that randomness in the market. Like, no, we got to get rid of all that. We all know what makes a good trade. We can define a process to put on a good trade. So it's up to us to continuously demonstrate those behaviors.
It's so important what you're saying. Sorry, go ahead, Rob.
Yeah, question, Joshua. On that last trade that you exemplified, did you use your 1 minute for the retest, or did you not wait for a retest at all?
I love that question. Hold on, let me find. What day was that? Shoot.
I asked him the same question.
Yeah, right? He did. Hold on. Yeah, well, right after I did it. Yeah. So hold on. What day was that?
I told him on it, but yeah.
Oh, it was this day. No, it wasn't. Hold on. Shoot. How did I lose it? Let me see. Hold on.
I think it was Friday, wasn't it?
No.
Just this last Friday on Q's?
No. Are you talking about the one that I just had open or yesterday's?
Yeah.
Hold on.
The last one.
Okay, hold on. No, okay.
QQQ. Thursday or Friday.
Yeah, it was this week. So hold on. Let me just pull up the 2 minute time frame. Yeah. So, and this is important because this is critical. Okay. So on the 2 minute time frame.
There you go.
Yep, here it is. So what I did here is identified a level, right?
Yeah.
And my risk reward was so tight here that I was willing to literally just put the trade on and just accept the risk, right? Now,
so are you saying that you put your trade on as soon as you saw price break above the last high, which was just a few ticks above that level?
Yes, right.
Oh, okay. I got you.
Right when price held above here, this is when I entered the trade.
Right. Okay, I got you. I would have done the same. Okay, got you.
And that's one thing I actually picked up from Todd that was monumental. Was in does this work every time? No. But when price can hold above that previous resistance, right? And I love seeing that wick right there. That wick right there is everything to me, right? Because if that means then the sellers are stomped out and buyers are in control. So that was That was the entry right there, and my stop was super close. Now, me and Darren dived into this a little more, right? Because what happened this day is I ended up getting out of this trade like right here. I didn't wait till my target, right? I captured like a dollar move, and like I said, it paid well. And because anyone that trades options knows, if you're trading 0 day at 11 o'clock, these the premiums rip very fast. So I was able to lock in like a 60 or 70% return, and I was like, Darren, why didn't I wait for my target? And he had a really good answer. He goes, dude, there wasn't a retest. It wasn't it wasn't validated, or it wasn't proven. Buyers didn't prove they wanted it that much. So you hopped in, it moved up, you took your profit, and and that's what I love about teamwork, because that's something I can't see. I can't see that in my own behavior, right? I'll be like, oh, I was just being a bitch and took profits early. And Darren's like, well, you didn't really see the retest that you like to see, in that, subconsciously you're not this confident in the setup because of that. So
Exactly.
Josh, you took the what you took the long at the when the green took out the previous red.
yeah, I took the long right here on this candle. So this green knocked out that red, right? And then it came down, retested it, and then it started to go. And I probably because right here I'm writing in the Discord going looking for longs above 36384. And as I'm writing that, it comes down, tags it, and then I got my finger on the enter button because I don't want to throw bad info in there. You know what I'm saying? So then it rips. I press enter, and then I scan my face. I get in my trade, boom, and then I set my stop. And my stop is literally, and Todd, I use that methodology that you taught me, where my stop's gonna be probably right here, or right after this green candle, because if a red candle can take this green out, it's wrong.
Right.
And then
it's invalidating. If it does go there, it's invalidating the reason you got in.
Exactly. And that is right there. That means our trade plan didn't work, and we're out. And then that volume came in, and we defended VWAP, right? And then, and one thing I'm learning is not to let these candles freak me out anymore. The way I trade this is I'll have the 2-minute up along with the 5, and that kind of helps me get an overall idea. Hold on. I keep losing.
Yeah, you can't let the little red one scare you away.
Right.
Yeah, I used to do the same thing.
620. It's this day right here. Exactly right. Hold on. In the 5-minute, because it's like we were talking about earlier, where we need to be able to tap into what's going through our mind when this stuff is happening. That's why journaling, even if that's writing down on a piece of paper the emotions you feel during a trade, I highly recommend it, because think about it. Your brain, the way you perceive market information while you're in a trade is completely different than the way you perceive market information when you're not in a trade, right? That's due to whatever it may be: fear, anxiety, uncomfortableness. This is when we have to be brave, and we can't be ashamed of the fear. The what makes us brave is being able to trade under fear, right? We need to embrace the fear and the anxiety, right? I do believe one day we won't have as much fear and anxiety. Maybe it will be non-existent. I don't know. Maybe that comes with years of consistency or months. But right now, I'll be honest. When I enter a trade, there's fear and anxiety, and so what I'm doing to face that is to journal the emotions. And I think, Darren said it. If you know what emotions you're going through, you can now expect them and kind of, prepare and go, hey, yeah, I have anxiety right here. So what? You know what I mean? I know this trade plan. My stop loss is right here. It is what it is. Whatever happens, happens. So what? And, but back to that whole 5 minute versus 2 minute. Um, 2 minute I use to really dive deep into detail. 1 minute's just way too much. I think we've all agreed the 2 minute works really well. But I'll leave that 5 minute up, and then whatever, when you get a nice, probably 70% green candle, that really solidifies, hey, buyers are here, they're in control. The candles you want to worry about are like these. These are almost like, hey, get out. And this, it helps to stay in your trade longer. I've definitely seen a lot more ROI on my trades using the 5 and 2 minute.
But I'm just looking now at the 5 minute and the 2 minute, and it looks to me like that candle that was approaching that level, that 5 minute candle, probably looked red right until the last minute. Look,
Yep.
The first, it looked red, and then the very last candle there, I'm assuming 11:04, that is the one that broke that level, and then bam,
Yeah.
it did a tiny little pullback.
Yeah.
And the next candle was green. So that green candle looked red initially all the way until the very last minute, and this is why you need to wait for that 5 minute candle to close. Plus, it solidified that that little bull flag under that critical level there that we identified from that break and retest to the downside before.
Yes.
I mean, on the 1 minute you'd be able to see it. It's a tiny bull flag, but
Yeah.
I mean, it's higher lows after that strong buying out of demand. I mean,
yeah. And I think
it's a lot of things lining up there.
And we talked about this, right? So say you're looking to go short right here, and you start to get a nice red candle, right? This is why identifying critical levels and what happens around them are so important. Because I used to be the trader that would take this break and retest to the downside, right? But I didn't for multiple reasons, right? We had demand. We had XYZ. SPY was actually well above end of day right here, right? There was a lot of other factors keeping me from going short. But what you just explained, Aaron, was literally being able to perceive market information in live time unbiasedly. Because if you were, going, hey, this is a red candle, I'm looking to go short right here, but didn't wait for that 5 minute to close, you would have gotten 8 and up, right? And yes, sellers came in here, but buyers prevailed. And it's so important to go into every setup unbiasedly. And that's another reason why I love the way we're trading right now, because we're literally able to go, hey, whatever happens here, if this candle closes bear, if it closes bull, no doubt I'm going to trade with the information that's right in front of me at this moment. And that, I think that's so important, because so many traders can assume just because this massive red candle's here that the day's going to be bearish. Those are the traders that are going to keep looking for short setup, and then get stomped out. It's really important to be able to see what's in front of you unbiasedly. And I know we talk about these things, but how do we implement them? This is how we implement them. Being patient and letting the market paint its picture has literally been just a game changer. Like, we've seen it constantly this week. I mean, look at this.
SPY was also making higher lows and basically couldn't close below pre-market low and end of day, which is also a good sign.
Yes.
On that day. So I don't know if you were watching that at the same
Yes.
time, but that's also something that would have added to the confirmation there.
Yeah, SPY was definitely showing us a lot of bull material. This day was pretty good day as well. This day was pretty wild. Let me see which one did I trade? I think it was QQQ. Let me see. Could have been SPY. Let me see what SPY looked like. 628. I mean, SPY, it's so crazy. Like we say, everything changes. SPY had tons, way more. Oh, yeah, it was SPY I traded. So SPY has had a lot more strength than QQQ. They both demonstrated great opportunities, but it seems like yesterday, and I'm sure it was last week, that SPY or QQQ was way stronger than SPY. So, I mean, just let that sink in. It doesn't matter what happens today, it can change. What matters is our ability to trade with the overall market conditions. Now, I traded SPY this day, and once again, that break and retest level was critical on a larger time frame, right? This area where demand or supply turned to demand, right? We broke this level right here. So this 43440 area, right, was previous resistance, broke past it prior day. Now these days I love. It's as simple as identify critical level of the break and retest, and then the previous day high, right? I'm trying to capture the move in between. What do I need to see buyers defend this break and retest? And now this is where our demand rejection skills come into play, right? Because if you can take a step back, identify a break and retest on a much larger time frame, right? Where supply now turns to demand, right? Just like if this was a 5-minute a chart, how do you want to trade this, right? You want to see a demand rejection at this level. And that's literally what happened to a T. That is why I didn't take the market short off pre-market low. Because obviously that opportunity presented itself. Didn't take it. Instead, I wanted to see buyers show up here and look at the candles, dude. I mean, we're talking 30-cent wicks. 30-cent wicks. That's crazy. These wicks are 30 to like 35 cents long. That's buyers defending critically. But this is the level I identified here. I wanted to see buyers break this level. And literally they broke it, and they came down, broke below it. But once we got above this level, this is when I was willing to take the market long, targeting previous day high, which we got. And then we even, once again, probable trade. That's it. You know what I mean?
You guys were talking about the stop loss and how setting your stop loss was so important, and I'm just starting to get around that. Like in your example right there, where the day starts off with price kissing demand, I would normally wait for the 5-minute candle to close and then just enter at the first tick above the top of the 5-minute candle. But that would give me a risk reward ratio of say 1-to-1 to my next target, which might be overnight high or an FEG or something like that. And it would just kill me because it was just way too pale for me. So what I'm deciding to do is wait for price to come back after I've got my signal candle. Wait for price to come back to a more advantageous position. Like, for example, just a couple of ticks above the top of the red of the demand, and just put a buy stop there. Right. And if it happens to hit that, great. I'm in, because then my stop loss is from the top of the demand, just to the bottom of the demand, and that's a nice safe place to be. You know what I'm saying?
Exactly.
So your risk to reward goes up, exponentially, goes from say 1-to-1 to 1-to-2 right away, at least.
Oh yeah.
So that's huge for me.
Yeah, absolutely. Because now
that idea.
Yeah, you're literally risking 10 cents to make $2 move. Like that. Yeah. You can't. Once again, you cannot get hurt doing that. You can't.
Yeah.
You can't. I forgot who said it. Keep your as long as your losses are small, you're good. You know what I mean? Like you can't get hurt. and you identified a critical level. Buyers defending it. That's perfect. I like that. And that retest is so important. It's critical because I was talking to Darren about this. That retest. Oh, this was QQQ. Yeah. So that retest though, is gonna. Oh, look at QQQ. Actually, I'm not sure which one I traded. I have to check. But look at this. I mean, perfect break of previous day high. Yeah. Look at this. So this is a perfect example here. So you got previous high over here at 363.88. Price breaks past it. If you enter your trade right here, or right here, or right here, we're just going to talk options real quick. The premiums are way higher right here because the volume is usually much higher on a breakout. So if you buy your options, we'll just say you bought your options for $120 right here, because volume's high, it's the breakout. Market order on an option, you're going to pay pretty high for that. Then price comes down for the retest. I bought my options. Well, I watched options prices go from like 120 all the way down to $83, $85 right here. Right? So this is literally a retracement of 20, 30% just because you were impatient. Right? You acted so fast, you couldn't control it, right? And now you need buyers to come back to get your money back versus letting the retest happen and buying your options for $85. And then you can capture this move up here and literally make 20 to 30%, let alone the whole move to the upside. That retest is critical. And entering on that retest tells me and yourself that you have the conviction and confidence to go, hey, I don't care if this continues to rip. I only am going to take a good risk reward ratio setup. You know what I mean? Yeah, that retest.
Was that the 28th?
Yeah. Broke high a day, come down, retest it, and then price just continues to rally.
I'm taking a trade every day.
This one right here?
Yeah.
Absolutely. This is my bread and butter. This is our hey. And seriously, what does this trade demonstrate? This trade demonstrates that buyers are in control, right? They've broken previous high, right? The sellers are stomping out of their position. So the psychology behind it. You got seller right here that makes, let's just say, 20%. Seller right here makes 20%. Now, based on human behavior, he's going to take that setup again, right? Or he's still holding his position. That 20% is diminishing. All other sellers are stomping out of their trades quick. That's why we're getting these 3 massive green bars, right? And then price breaks above his entry. So now he's down 10%, 20%. Price comes down. This is where we don't know how many, but all we know is sellers then stomp out for a break even, and that fuels the buyers. It's literally reinforcing buyers' beliefs and expectations that they are in control. They have won the battle. This is the critical point analysis we talk about, where the littlest buyer is going to change the momentum of the day, right? Everything's going to change right here. This is where we want to be. This is where we want to be putting on trades. This is where you are trading with trend. You're trading with market conditions. Does this work every time? No, right? But this trade demonstrates extremely high risk-reward ratio, and this trade right here is going to keep you from a trade, and you just have so much more conviction with it because you're trading with the overall picture of the market. You are trading with smart money. I mean, look at these massive candles. These are 2-minute candles going up 30 cents, 40 cents, 60 cents, right? These are big moves. This is where you want to be. I mean, your first 10 minutes in this trade, you are up almost $2 on the QQQ. That's huge. That's literally like 120, 130% return. I mean, I listen, guys. I'm here. We talk about low hanging fruit. This is literally low hanging diamonds. This is like, this is if you can be patient enough to wait for setups like this, you're gonna get consistency all day.
Yeah, another thing that I like to watch on setups like this, and it's a little bit more obvious on SPY, but basically at the beginning of the day, there's going to be these two levels where you got sellers. You got sellers. Yeah. So zoom in right here, so you can kind of see this channel that's building up. There's sellers up there, and there's buyers. I don't know if it was. What day are you on?
I'm on the 28th.
Oh, I was looking at 29th.
Okay.
I was looking at 29th. It also kind of did the same thing, but you have at the beginning of the day, you have like, for example, 437.18 is like kind of a level where sellers are stepping into the market, and then you have 436.26 where buyers are stepping in. So you got this kind of like channel where there's
Right.
orders sitting at the bottom and the top, and then it breaks out of one side, and then all of the buyers will stop out, providing liquidity, and then it will basically reverse and go back up. So it'll like break out of one side of that channel,
Yeah.
and then it will reverse and go back once large money has gotten the liquidity that they need to enter their positions. And I do see this a lot, especially at the beginning of the day like this, when you have like rushed buyers trying to enter the market.
Right.
If you have the patience to wait, maybe that's not even your entry. Maybe like 10:45 is not necessarily your entry for longs, but at least that's a signal for you to say, okay,
yes,
that like sellers are no longer here.
Right.
Now I want to watch buyers, and then maybe this break and retest a little bit higher. That could be your entry.
Yeah.
But I always like watching this kind of thing to just see like what's big money trying to do? How are they using retail traders to their benefit and kind of like showing us their hand, and then we can play with them.
Exactly. Well, and think about it, right? Big money needs retail to, I mean, they need as much liquidity as they can get to make as much money as they can. Because it comes a point, I mean, say we have so much money, you can't just go long, you can't just go short, right? You're literally trading billions of dollars, like BlackRock, whoever it is. Like some of these people, these hedge funds have so much money. How do you trade $20 billion? You know what I mean? You literally need to use all this congestion, people getting stomped out. You literally move price in a way that shakes all the retail traders out of their positions, right? So say you want to go long and you're big money. You need other people to pick the other end of your trade. You need sellers. Yes. You need sellers. That's what we call liquidity. They need liquidity on the other side of their trade. They can't just sell, or long, right? They need someone to take the other end. This is a zero-sum game. When someone wins, someone loses. That's it. Every time we make money, guys, someone's losing money, right? Every time we lose money, someone's making money, right? That's literally, there's nothing in between. So all this big money is just, coming up here and then going short, shaking all these buyers out, right? Stop loss, because all the people that do the trail stops or whatever, shake out, and then they go back up, look. And then all these guys re-enter their positions, and then they take all that money, right? They take all their positions, right? Think of it as an option trader. You want to place 10,000 option trade. There's only 1,000 on the market. You need to get all these people to get out of their positions. And not only that, you're buying them cheap, right? Because right here, they're worth $200. Right here, they're worth 80, right? So now you're stomping everybody out of their stuff. You're collecting more. And now what we're seeing right here is they have enough. I don't know if you guys can see that little arrow, but they have enough contracts where they can now move the market up and make money, right? And then here, all the sellers are again getting stopped out of their trade. And then literally, look at this volume right here. This is probably where they're exiting, or I don't know, something like that, right? So, it's like you said, Darren, the patience it takes to sit back, watch this, right? See this for what it's worth is it's just
Yeah,
it's
that's
gonna
what I'm saying. Like, ideally, you don't want to be caught up in this action because,
no.
I mean, even if you do have a trade on during this time and you do get a good entry, if you have money on the line, your emotions are in play, and you're not necessarily going to be able to see the price action for what it really is.
Right.
But if you do have patience and you kind of raise your standards for what you need to see, you don't have any money in the market while this is happening, so you're able to read price action and
Exactly.
you can understand it way better when you don't have trade on. I'm sure we've all experienced that. So I don't know. This is just another example of like how patience and waiting for the market to paint its picture, maybe spot large money. It's just going to help you like identify what's actually happening.
Absolutely. I love how you said that. If you don't have money in this right here, you're gonna visualize it properly for what it is. That's it.
I get caught up in that. Like, don't get me wrong.
Oh, absolutely.
I do. It does happen from time to time, but I've just noticed that when I don't place trades during that time, I'm just able to see it for what it is. You know?
So I want to talk real quick. Look at this head and shoulders, right? Or whatever you want to call it. You got a left shoulder, you get a double top, you get a right shoulder. Extremely bearish, right? What kept us from going short here? I don't know. Maybe it could have been a lot of things.
Risk to reward.
Right. Okay.
My target would have been
too tight.
Day, basically, and so, that's just not good enough.
Right. So now we've identified a bearish chart pattern. What's it going to take to prove to you buyers want this? Right?
Oh, boom. I see where you're going with that.
So now,
yep.
So now I'm thinking bearish. I don't take it because my risk reward's not good. Then buyers rip below past this critical level. This is right where we get in the trade, right? Because now, if we can hold this previous supply zone here, right? If we can hold this, that's telling me sellers are not as strong as they think. They got a loud bark, but a weak bite. And that's literally how I looked at this. And then it was pretty much, okay, I'm long. My stop's right here. I want a target high of day and then pre-market high, which is literally how that plays.
It's everybody's beliefs about that head and shoulders. Slapping them in the face and being like, yeah, that's not happening.
Yes.
And then realizing that and stopping out.
Exactly. I mean, look, and this was a huge mind bending pattern because you get this, left shoulder, head, double top, right shoulder, tank, then a massive green candle. Just,
double head and shoulders.
Yes. Just blowing away all your beliefs and expectations here. The smart sellers get out, then that fuels the move, and then they start getting stomped out. Look at the volume. Starts to pick up. Bam. This is the move you want. This is what you're looking for. And then, then after that, it's break and retest off high of day. Just reinforcing that buyers are in control. And then rip right in the pre-market high. And, I love going through this because this is literally just burning into our mind what we need to see to, just read what's in front of us properly. So, really good stuff, guys. Listen, I'm about to wrap this up. This has been a very good recap. I love everyone showing up. This is what it's going to take for us to continue to grow. I mean, look at the progress we've all made. Just the way we perceive market information. This is what we need to do to take the rest of this year and start to hit that $100,000 trader. Because that's my goal by the end of this year is for us to literally be making consistent returns monthly, quarterly, yearly, right? It's good days make up good weeks make up good months, and good months make up good years. I mean, I see it in my journal. I'm sure you guys do too. But this way of thinking is the way to become super consistent, right? And I just love seeing that everyone's understanding what we're doing. It's we, like I've said before, we earned this perception of market information. Like, this isn't just, and no one can just look at a chart and see what we see. This comes with a lot of journaling and losses and overcoming, right? We don't let those losses define us. We overcome them, and we, and we're in the right direction. I absolutely love this. So,
Coming into some big resistance, looks like, too. Start off the week next week.
yeah, and
that 4,500 on the futures is going to be huge.
Yeah, and now let's talk about that real quick. So, yeah, well, look, Todd, I have it right there. So, I mean, so check it out. This level, right? Am I expecting sellers? No. Am I expecting buyers? No. I'm going to look at this just like it was a 5-minute and go, hey, we are bull flagging into an area of value, a critical level. I want to see what happens. I mean, if we could break this 4,500 level, there's no doubt about it, we're going to see 4630. I don't know if you guys looked at this. Check this out. Look at the monthly candle. Look at that. So look at this like it was. Yeah, look at this like it was a 5-minute. If this was a 5-minute time frame, we'd have all went long right here when we broke past this, right? And we'd have been targeting 4,800. So I'm not saying that's going to happen. I'm just saying keep your mind open. Just because we're going to resistances doesn't mean sellers are going to be there or win the battle. They could, absolutely. But just keep in mind that what's most important is identifying critical levels and seeing how they trade, right? Because it looks like we're getting a break and retest off this high right here. And what's crazy is the future in the ETF is different. The ETF, this looks like a double top. That future just kind of looks like, I mean, that's a break and retest. Or I don't know, maybe I have it drawn a little different. But at the end of the day, this could be good. I mean, and no matter what though.
What level were you looking at as resistance?
On
4,500.
Okay, yep, I see that.
Yep.
Showing up on the weekly, pretty good.
Yeah, right there. But look at the difference of the candles though. This candle has a massive wick, indicating sellers prevailed. This candle's engulfing. So, once again, that doesn't mean a lot, but it does mean buyers are here. They're ready for the battle. They have their shields. They have their weapons. they got sleep. They're ready to go. So, we got that first little wick. And then we got that week where sellers tried, and this level over here at 43.74 was defended, and now we're starting to flag in this area of value. And once again, what we do, guys, is identify levels and see what happens. The way I'm going to go into this is this level right here at 4485 is pretty critical. I want to see us hold above it, and then maybe retest up here. But if we start to fall below this level right here at 4474, right? If we cannot hold this level, that's telling me sellers are pretty in control, and we can come all the way down to our next move. So, yeah, just that whole mentality of I'm not going to predict shit. I'm just going to sit and wait and see what happens is important, because once we try to identify moves before they happen, it could get ugly. But yeah, I can't believe the market's just reacting as well as it is. I mean, this monthly time frame really hit me hard. This right here is because one thing we'll see, and we seen it on Friday. Real quick before we go, I took longs on QQQ on Friday, and boy, this was uncomfortable. I mean, there was a lot of I mean, look at all this large money gathering, just getting everybody to stomp out of their position here. Look at this. So price was bullish above this 36822 level. This was when I first took the market long, and price went up, bull flagged, right? And the volume was extremely high. These candles don't do it much justice. We were getting a massive range on these 2-minute candles. Look, I mean, this range right here is literally 60 cents, right? So I mean, and futures options, I'm sure it's pretty similar, but this is a range right here of 40% return, like 30% return, right? So if you're up, I entered on this candle right here, right? So I'm up about $1. Let me see. Yes, I'm up $1, right? I'm up around 70%. And then this happens. Now I'm up 20%, right? So this is this doesn't look like much, but this is going to affect your mentality. So so because now you're faced with, okay, I'm still up $400. Do I take this and go home, or do I stick to my trade plan? And literally, I stayed in the trade, and
I traded the news that morning. I was done at pre-market. That was a good one.
oh yeah, you traded that right there.
Yeah, they had I think some kind of numbers, Michigan or some kind of numbers came
CPE
out.
CPE numbers
Yeah,
were better than expected, but
yeah.
yeah, this was uncomfortable, right? This is super uncomfortable. Breaks high of day, comes down, looks like a fake out, and then rallies. So it's like we were talking about. You put risk on the table. I'm long here, my stop's here, and then and understand that smart money is going to try to fake you out. They want your position. They want your position. And then, so I'm trying really hard lately to go, hey, the 1 hour's telling me this, right? I want to stay in. This is because it looked like this at the time. So I'm like, listen, I'm staying in this trade, because I see us going a little higher. My target's up here, so even though price action looks wild on the 2-minute, just get comfortable with being uncomfortable. And is what it is. So on that point, or on that note, fellas, our first 6 months went great. I feel like we're in a great mentality and state of mind. Let's keep this up. Let's keep working with each other and keep showing up, keep putting in this work, and reach our dreams as traders. I really think we could do it.
Hell yeah, guys. Solid recap. I'm going to do a plug for my little journal that I threw out in the resources. I basically put down all the things that I use to journal every day, what I did right, how I could improve, did I follow my trading strategy, and grading my performance. So check it out. I printed out a bunch.
Yes, it's really good stuff.
It just helps me because a lot of times I don't know exactly what to journal about. But if I have things that I can fill in, there's just a higher chance that I'm going to put like all of the critical information on that sheet. But check it out. Let me know what you think, and maybe I can make some improvements. But solid recap, guys. Shout out to everyone who showed up on 4th of July weekend. You guys are real ones. So, but have a good weekend, and catch you guys all next week.
Yes. All right, fellas.
You have a great weekend. Thanks so much for the whole thing.
Absolutely.
Where are you posting that at, Darren? What channel?
It's in resources.
Resources. Gotcha.
Yep. Yeah.
Thank you.
Yeah, no worries, guys. Have a good weekend.